Paul, it's good to have you here with us on a Monday where we're seeing red across the board, because you tend to, of course, be the ultimate bull in the market. So is there anything to be positive for right now?
Yes, if you're holding South African bonds, offshore bonds, South African listed property down a little bit today. Offshore listed property is also doing well, up close to 20% in rands so far this year. So if you're in 3 out of the 4 asset classes, money market, bonds, listed property, you've done very well so far this year.
Yeah, we've seen, that bond market continues to rally, and of course the property sector tends to be very highly correlated with that. Do you think that the property sector is going to continue to have this sharp rally, given the fact that ultimately surely you'd look at property values coming back if you have an economic slowdown?
It's had a huge run, total return of 28.5%, maybe 28% at the end of today. So far this year, 2012, 6.5 months. But if you look at the forward yield of the listed property sector one year out, it's about 6.9%, which is still quite a bit higher than the South African 10-year government bond yield of, give or take, about 5.6%. So it's not out of line. It's not overpriced relative to bonds, which is its main stable partner.
And basically, momentum is backing bond markets at these levels, given the fact that we're not going to see interest rates increasing anytime soon, and especially in South Africa, where it seems like we've started another interest rate cutting cycle.
Yeah, exactly. So on the whole, this massive blanket that's extending around the world, pushing interest rates down, pushing bond yields down, doesn't look like it's going to abate much. It could, you could have a little bit of a turn the other way, but on the whole, it's weak economies, lower inflation, and people just want to lower interest rates. The emerging markets are doing it at the moment. The developed markets have mostly done it, and it doesn't look like that's going to change in the near future because of the high government debt.
If we're talking about sectors in South Africa right now, you've seen the resources sector continue to fall lower. That has been, of course, a trend that has been firmly in place this year. And, no doubt that the platinum sector falling in line with the fact that there's a very bearish outlook for platinum right now.
Yes. Platinum, the shares have fallen dramatically, and they fell again today, especially Amplat's to another low for the year.
Yep.
So
405.50 at this point in time is down almost 4% today, after we already knew what the results were going to be last week.
Exactly, and I think the share went to 1,400 in 2008, so it's down 1,000 rand. And I think one of the scary things about the result today was the cash flow. The net debt went from 7 billion to 9.6 billion, so net outflow of 2.6 billion rand in the past year. And things haven't really improved, so bit of concern for sure. Doesn't look like a great ongoing business as we sit here right now.
What about the technology space? Pinnacle, one of the stocks that has come out with a trading update, and looking at those numbers, full year HEPS is expected to be between 42 and 50% higher. If you can get earnings like that continuing to increase, do you get exposure to the tech sector or specific to a Pinnacle story?
I think so. I think, that's one of the better performers, and I think it's been doing it for a while. But no question, the IT shares on the whole have done better, and, they've seen the demand for technology, for improved processes in companies continues to be there. And companies around the world, certainly the big companies, have a lot of cash on hand, and they're generating good cash flows. Not the platinum, but most of the others.
Are they putting this money to work though? Which of the companies are putting this money to work, and who's benefiting from it? Because by all accounts and purposes, they're not. They're just sitting with it, waiting for a better day, and then to start putting that money into the real economy.
No, I'm just saying the IT companies seem to be getting some good demand for their products and services. So on the whole, they seem to be doing pretty well.
What about the insurance sector? Liberty also coming out with a nice trading update today. Is this a sector that you like if you had to get exposure to equities right now?
Well, that's very interesting. Liberty said it was going to be up 30% plus, maybe up to 45%, which is a very strong increase. And they're saying it's their investment portfolio, their shareholder investment portfolio. So they must have had a very good portfolio managed by Stanlib in the past year to get that sort of return, because the financial industrial index is up, give or take, including dividends, probably about 19% in that 12-month period. So to get a 30% plus return.
So you're doing something right there, Paul.
Gee, my colleagues must be.
Okay, so there we go. And offshore, what about offshore equities, offshore exposure at this point in time? Should people be looking at various pockets of asset classes at this point if you're going to cushion against perhaps a slowdown in South Africa?
Well, certainly you're benefiting from the weaker rand. The rand's down, is it 25% in the last 12 months against the dollar? Not so much against the euro, but certainly against the dollar. So, it makes sense to have assets offshore as long as you have a time period of at least 5 years. I think it makes sense.
Which assets?
Well, if you're in a balanced portfolio, some equities, some listed properties, some bonds, and some money market. And, if you look at as I said, the global listed properties outperforming global equities. In rand terms, it's up roughly 20% this year. Global listed property in rands, which is not that much lower than SA listed property. And we continue to like it. It's on a forward dividend yield of give or take 3.5%, 3.6%, which is good relative to other asset classes offshore. So, what I always say is this period between May and September creates buying opportunities because, half of the people offshore, or a large chunk of them, are on the beach. They couldn't care less about business and markets. It's like us in December, January. We're with our families. We're in drinking a few wine.
Trying to get some perspective on life. Yeah.
Your mind's off the game, and you're taking a break. They badly need a break after the last year, probably especially the Europeans. So, the volumes are down. Bad news is magnified. Good news is swept under the carpet, and it creates a wonderful opportunity if you believe things will improve to pick up risk assets like equities.
Well, on that note, we'll leave it there for today. Thank you so much for joining us today. Paul Hansen from Stanlib.